Hello, everyone. My name is Josh Cogan. I'm a lead client partner here at Finastra, and I'll be your moderator for today's session. Thank you very much for joining us on today's webinar entitled Navigating Real-Time Payments with Real-Time Compliance. Now, in recent years, the financial sector has seen the introduction of real-time payment systems across the globe, and this has accelerated the rate of transformation across financial services as a whole. These payments, enabling near real-time transmission and availability of funds to payees, have launched in the US and many countries abroad, and in parallel have raised questions from within the financial sector itself. There are, however, numerous benefits to the end users of these systems, with real-time payments underpinning the digital economy and the powerful use cases that come with it. And however, real-time payments do increase the technical demands on payment systems. And in conjunction with a tougher compliance environment, the challenges to be addressed across the payments value chain continue to evolve. One area of particular concern, given its importance to any financial institution's compliance framework, is global sanction screening. And it is these dual topics of instant payments and sanction screening, which will be our key areas of discussion today. In this short webinar, we'll share with you a range of information and advice on how to solve for instant payments and sanction screening, key regulatory expectations, technology best practices, and much more. Now, at Finastra, we are the global leaders in payment system software. We advise financial institutions, payment system operators, and regulators across the globe. And we partner with best of breed fintechs to support our customers in addressing their own and their customers' payments needs. And with such deep expertise at hand, I'm very lucky to be joined here by two experts in their field. Lending their expertise on today's webinar is Kristen Robertson, Director of Account Management at Finastra, and Gideon Drori, Chief Executive Officer at Fincom. Kristen, Giddy, thank you very much for joining me today.
Thank you.
Happy to be here.
Thanks, Chris. Before we kick off the discussion, I'd like to give both of you a minute to just introduce yourselves to our audience. So with that, Kristen, may I hand it over to you?
Yeah, thank you, Josh. So I've been in and around the payments industry for well over 25 years, working really on both sides of the house, working with historically large global corporates and non-bank financial institutions on their payment needs. So that gives me really deep domain expertise in what matters most to corporate treasurers and their own regulators. And then also working extensively with banks throughout the US on their own back of the house payment needs. So the last mile and connectivity to the actual clearing, which is critically important when it comes to especially instant payments and wire schemes, and that there's finality of payment and ensuring that you've got really great controls insofar as fraud and sanction screening compliance is concerned. I currently manage the mid-market account base for Finastra in the United States, which comprises of a portfolio of both small right up to super regional banks and a team of account managers, and I'm available as a subject matter expert for our banking customers here at Finastra.
Fantastic. Thank you very much, Kristen. Great to have you with us. And Giddy, over to you.
Thanks, Josh. Hello, everybody. My name is Gideon Drori. My friends call me Giddy, so that's why you hear the nickname. It's a pleasure being here. Thank you for calling me in. The CEO of a deep tech technology called Fincom. Deep tech technology in the fact that we're using advanced computational linguistics and phonetics and bringing really the state-of-the-art new technology to the space of sanction screening, be it for KYC, KYB, but where our expertise really lies in all the transactional world, the day-to-day business, the knit and grit. How do we get you there from a tedious operational cost, which is really hard on your pocket, to a point where it's easy, it runs, and it's not that expensive. We're finding we're working as partners with Finastra with great success. I got to mention that in the last 20 months, and incredible success. Anybody that hears it is absolutely astonished. A lot to do, of course, with the two of you. So thank you so much from the get-go, Kristen and Josh.
Great, thanks a lot, Giddy. And look forward to exploring all that success and the reasons behind it throughout the session. So to start us off, let's just explore some bits around the market drivers for instant payments, the regulatory backdrop, and to level set with our audience. Kristen, I'd really like to understand the beginning. What do we mean when we speak about instant payments, and what are the kind of key demand drivers that you're seeing in the market around it?
Yeah, definitely. And I think it's important to note a little bit of a historical perspective because here in the US, it's certainly very, very new and shiny object for us with the FedNow being launched last year in July. But the actual first payment scheme went into production in 1973 in Japan. It was a clearing called the Zengin format. So this has been in and around the worldwide payment landscape for quite some time, but country by country adoption was really limited until around the year 2000. But as of today, there are 56 countries throughout the world who have their own instant payment schemes. And I think it's important to know that all of them, for those 56 different countries and schemes, share three key attributes. One is the speed, in that it's instant or near real time, and the availability, which is 24/7 by 365, which is certainly one of the things that's presenting a lot of challenges here in the US. And then confirmation of payment, both for the actual payee and the recipient. So they actually know the status of the transaction in real time. These are very chatty methods of payment. And there's huge, huge demand for this payment type, especially here in the US, because of the attractiveness of that immediacy of the money movement, which assists in better liquidity and the always on availability of the method of payment. The fact you can go and buy a car on a Saturday and not have to worry about getting an official check or a wire because your bank is normally closed is now a reality here in the US. So the use cases are very, very, very long. But here in the US, frankly, we were a laggard. Because compared to other nations, as we started our first clearing in 2017, which was a private network called the Clearinghouse, and then followed for the first time in over 50 years, the Federal Reserve Bank launched FedNow on July 20th of 2023. And we now have 600 institutions who are onboarded, and that includes both the service providers, credit unions, banks, but they're still relatively low volume. So we'll get into a little bit more detail as to why in a bit, but I'm going to pause there because I just, gave a lot of background, and I wanted to see, Giddy, if you wanted to add anything to the, what is it and the kind of history that I just shared.
Well, you're really, this is a lot of times also as clients, I always give you the main stage as you are far more knowledgeable. I will just add 15% is approximately, 600 is still only 15% of the US banking sector. So it's not only the volume has a lot to do with the amount of institutions that are connected, and there'll be this peak where it'll just take off. So you better be there, and that's one thing. And I think most institutions know that. We're seeing their search and their need. In instant payments, the compliance regime is actually different than in wires also. One of the problems is not, there's two major problems. One is the speed and how you do sanction screening, but also fraud. Do you know do you remember the stats about the issues of fraud initially in Europe?
Yeah, that's a great point, because I think there's a lot, you raise a very, very outstanding point. There's a lot of fear, uncertainty, and doubt. And when you look to other countries, you can kind of get a baseline and do lessons learned. So you mentioned faster payments in the UK, which a lot of us look to see what happened when they launched, because they did theirs in 2008. So if you were to look at 2007, the run rate for fraud in the UK was £22.6 million. When they went live with faster payments, that more than doubled at £52.5 million. And everyone there said, what can we do? This is not acceptable. And they did some serious course corrections that we can learn from here in the United States, where they frankly said, due to the clock and the finality of payment, they needed better technology partners for two things: inline sanction screening and for inline fraud screening. And the fraud screening needed to be more robust, and that it needed to consider geo-authentication, meaning, Giddy's typically in one location. Today, he's trying to log in and initiate a payment from Russia. That's not normally where you operate out of, and that should be flagged accordingly. And that's also device analysis, session navigation. Are you clicking and doing what you normally would do as you're interacting with the institution? And then layer that on, is this normal behavior for you? Is it normal for you to be moving, $500,000 or $25,000 versus a smaller transactional limit? And then reviewing these data points cross-channel to get really an accurate view is what's needed. And then couple that with making sure you're not paying a suspicious character or a known terrorist or terrorist organization. All of those needed to be layered in, which they did in the UK. And they saw their fraud and their compliance metrics course correct back to normal standards. And I think that's something that we can look to and say, what are we doing here in the United States to emulate those best practices to avoid those pitfalls? Great point.
And so with that, you obviously have this new kind of service and benchmark in instant payments. With that, naturally, like any product or service within financial services, comes new risks, new risk dimensions, enhanced risk. And so interested to get your view as instant payments are being rolled out in the US. Is there a view from the regulators that standards need to increase across the board when really trying to service against those risks?
Well, I just wanted to add also to what you're saying, if I may, also to what Kristen was pointing out on the fraud. One of the problems was also APP fraud, push fraud that was happening, and the UK actually came in with confirmation of payee that reduced that, which combated that fraud. Was actually a lot of success. Today, Europe is adding a regulation called VOP, which is the exact same thing, but verification of payee. And I believe in the US, we're calling it bank account verification, BAF. It's the same thing. It's the exact same thing. It's one of those things that you'll have to have a payment engine that does real-time payments, be able to verify, is this coming in because of the finality of that transaction? First of all, that there's no mistakes. Let's start from there, and that it's coming to the right person and and everything associated. But to your point, Josh, the rigorous demands. If we look at fraud, monitoring, it's usually end of day batch. But to what Kristen is talking about is actually information that we scan in real time, like geolocation. So one of the points that you need to be able to do, maybe as a financial institution, is try to understand your fraud needs and your vendors, and to come to Finastra and say, well, I need this. How can you help me? Maybe to come to your vendors and their vendors. So Finastra works with us, but works with others. How can we support? There may be just one point that you're lacking because Finastra has multiple solutions, and then that point can be resolved. It's actually to open up, because you're coming into a new territory with multiple, as we're seeing, multiple experiences from around the world. And instead of trying to build everything from scratch and going through the growing pains as others, we have this opportunity to learn from others and implement the better and faster and safer.
I think it's Kristen, please.
I just wanted to add an additional, I think it's a really key point. I don't think the banks don't have the same sort of time pressure that you see with US wires as you do with instant payments. And frankly, it's managing all of the items that Giddy just highlighted with the pressure of the clock that you have with both the clearinghouse and the FedNow service. And I think because of that, that's why we're seeing a lot of institutions in the US market start first with a receive only, so that they're comfortable with incoming transactions in the inline screening associated with same, but they've yet to, and we can get into more details as to why in a bit, but they've yet to initiate the actual send. So we're seeing, although high adoption in over 600 institutions, but relatively low transactional flow. And I think that that faucet will be turning on now that banks are getting through the fear, uncertainty, and doubt, and looking at their technological supply chain and the fintechs that are in the market, like the Fincoms and the fraud tools that are available and used in other regions of the world to course correct for fraud. And they're doing it now before it actually occurs. So we're being very, very, I think, cautious and prudent. And the Fed in itself has gone to market with a number of recommendations, including, stay involved, stay informed. There's industry councils like the U.S. Faster Payment Councils and the FedNow community that many banks are participating in. They're talking with vendors like Finastra and Fincom to understand the market. And the service in itself has its own kind of built-in tools that allow for a financial institution to establish their own risk-based, like transactional value limits. They have a concept called a negative list built into the FedNow service in itself, where you can prevent certain accounts from initiating. And that's just out of the box. And then you layer in the right fintech partners based upon your own risk appetite. And folks are starting to get more comfortable with the actual payment initiation piece.
So
yes, no. So it's fine, please.
Well, I want to first of all kind of say, so there's lots of different risks to be addressed across the value chain within instant payments, which you spoke about. We have fraud and all the different solutions we can put in against them. But to your point, Kristen, we want to get our listeners really informed, and let's look at the specific area that we wanted to discuss today, which is sanction screening. So could you please kind of walk us through how typical sanction screening systems work, a bit of a 101 for our audience, and then we can really deep dive on a bit more.
Yeah, certainly. And as you all know, Finastra is very much open and inclusive. And because of that, we work really across what I construe as three main sanction screening solution sets. And I'm going to just do broad approach for what we see in the marketplace. And starting with, frankly, the most basic way to solve for sanction screening and really kind of the worst practice for SAME is what I would call a token-based screening approach. And that's where an institution would acquire a list from a third party that takes the various U.S. Department of Treasury lists, and they tokenize it, meaning they take the names and they do some slight variations to SAME and create each one as its own unique token. And that gets uniquely matched to the payment data coming from the bank prior to payment initiation. So it has to be a one-to-one unique match. And because of that, there is a plethora of false positives that occur through these institutions, somewhat running up, over 60%, which is not an ideal customer experience when it comes to instant payments, meaning 60% or more of your transactions will be stopped or held. And it certainly is costly in that you have to have the compliance officers or team review each of those false positives prior to payment origination. So that's kind of the first concept or approach to solving is sanction screening is token. Go ahead, Giddy. You look like you want to say something.
I wanted to point out something to what you're saying, and this is like kind of a little bit more on a background level. The major cost of sanction screening, put aside the huge amount of fines that OFAC and then you have, of course, the reputational issue. But if you're looking at the sheer operational cost, the license and IT are the small part of that cost, and this needs to be understood. That's the very small part. Doesn't matter. Where it becomes really big is the operational cost. To your point on the token base, even if you give somebody a token based solution for free, and they have a 60% alert rate, they're going to be spending hundreds of thousands of man and woman hours a year, in resolve, if they're a medium-sized bank, to resolving those alerts. And it's just tedious and stupid, and there's no need for it because technology has gone way beyond that. And that was my 2 cents on that issue specifically, but we'll talk about it a little bit more. Please keep on going.
Yeah, sure. So that's kind of the first broad category, and there's a number of providers out there that do token-based screening. And then I'd say the next, and frankly, the majority of the fintechs and solutions that you see in the marketplace are what I would call fuzzy naming logic. And many of them use, for those of you who dig into the details, Levenstein naming algorithms and others, and they may be more than one algorithm combined. But the concept is basically to take the name and then in a programmatic way, instead of having each one be a token, to use different variations and deviations of same to get a better matching process, and it can be tuned with percentage false tolerance rates, so on and so forth. So generally, folks who are using that kind of fuzzy name matching logic are getting better rates of false positive, meaning less than the 60%, but a lot of them still struggle, and we see some with 30% or higher, and they're doing unnatural acts like creating what the industry is traditionally called whitelists to help see improvements. And you've seen institutions get fined because you then need to regularly screen your okay to pay lists, meaning I've gone and done my due diligence. I know that Giddy's not a known terrorist or bad guy, and he's okay to pay today, but maybe a week from now, he's not okay to pay. And if I don't screen that regular list, there's been some serious fines and reputational harm from clients who are doing that. So it's not a best practice, and folks are doing that to get even better improvement. So certainly better than token-based. More of a majority market share is what we're seeing with fuzzy name logic, but not best of breed or best practice as of today. And I'll pause and see if Giddy wants to add anything to that, because I know you can get a lot more down in the weeds.
Yeah, I mean, I'll just go into the fact that fuzzy logic actually works within the framework that is in the law. So actually, in the law, in the U.S. Treasury law regarding OFAC and sanction screening, it says that you have to be able to search between Havana to Havana, between HAV to HAB. That's actually one of, they have their few examples, that's one of them. So common practice is to have a funnel that's open enough by 72%. Fuzzy logic is looking at between that funnel. Usually you'll see anywhere between 150 to 300 rules. So if I have an S, maybe I'll have afterwards an H, and if I have an H, I will have a certain letter. And if I don't have that certain letter, then something else will come in, and all these rules come into play. Now, the problem is you have 150 rules at minimum. It takes time. There's like, if you think about it, it's 1 to 2 bytes on it, and web networking and so on. It takes time to do a transaction. It takes over 2 seconds. So the problem is, how do you use fuzzy logic in the world of real-time payments, especially when solutions come out and say, we're doing it. I do want to add something on the token base. People say, oh, token base works really well in the beginning. Yes, it does. At the first instant, when it's tuned exactly and nothing has been touched, it works wonderfully well. It's like the best. What was the biggest lemon car ever? I don't remember its name. The Edsel, I guess. You brought it out of the factory, it worked, it drove everywhere, and a week later, it started to fall apart. That's pretty much what happens. Token base is based on your configuration, but since the sanction list is weekly updated, sometimes twice, every update just takes it out of whack. And after a month, 2 months, 3, 4 updates, it's out there. That's the reason it doesn't work well. Fuzzy logic, tweaking and all the time you have to play with it, and then you have to do model validation. So it's not only you have your 2 costs, you have your cost of model validation and all the time checking it to make sure it's working well, and also the operational cost. Yes, 25, 30%, it's that average and upwards, and we see that. So shall I explain about Fincom maybe?
Well, I'd like to give a little bit of backdrop because, frankly, I've been being in and around the payments landscape for over 25 years. When I was first introduced to Giddy,
in kindergarten, if nobody
I did. I was. Yes,
she was
I was.
6 years old, going into first grade and payments.
I'm dating myself, I'm aware, but I got super excited for your technology because frankly, it's the first time I've personally seen true innovation in and around the sanction screening process. And basically, just to give the folks a general view, when you go to Starbucks and you give your name, my name, Kristen, it can be spelled so many different ways. What ends up going on your cup is what the individuals hear there phonetically. I've never seen it spelled correctly. And so what FinCom does is they're using a phonetic-based approach to screening, taking local language into account. And that just blew my mind in that it was frankly an extremely innovative way to go about it. And the technology behind it is so advanced. And I thought it was too good to be true, because what FinCom shared is that their average rate of false positives was less than 7%. And I'll have Giddy get into the details, but we have worked actively across my own customer base here at Finastra, and we've taken customers from solutions where they've had 60% or more false positive rates, and day one, before like actually getting better persistence and tuning, they're getting less than 4%. So that kind of improvement in straight through processing and the operational reduction, coupled with the speed that they can actually do their screening, is a perfect solution for instant payments, in my view, throughout the world. So I'll pause there. That's kind of my, frankly, endorsement.
She took my whole act.
No, but you can get a little more granular into how it works, Giddy, because you definitely are.
That's fine. That's fine.
Yeah, but
thank you so much.
Exactly. So Giddy, please do, right? You said that we have token-based and fuzzy logic. According to you both, neither of them are best practice. And based on Kristen's ringing endorsement, Giddy, I hope that FinCom is. So can you please give us a bit of a walkthrough on how it works?
Thank you. First of all, Kristen, for that build-up, and Josh, for your question. So first of all, FinCom is the latest in this technology space. It's actually a dual-use technology. It's a technology to manage databases and data management. We took that core technology. Some people call it entity resolution or whatever. We took that core technology, which is, as I mentioned before, deep tech technology. And this sort of technology that exactly like what we do, you can only find in the top intelligence industry. That's it. Not like NSA. That's who has similar technology. MI6, Mossad. We benchmarked, and we work with DoD and with Treasury, and with the regulators. So this is where you could find these technologies. I do believe, Kristen, we've spoken about this, I do believe you'll see more companies like the leading legacy solutions in the market, like LexisNexis and NICE and others, that will adopt similar technologies, because this is what it is. They have to get there, and they will evolve. But we now are probably first to market with this solution. The solution is to what Kristen's saying, is we're leveling out the field. We're moving from the world of vocabularies and accents and languages to a world of mathematics. So we all can be romantics and say there's only one universal language, which is love, but let's be real, it's mathematics. To all us dorks out there, mathematics is the worldwide universal, the universe language. And what we're doing is we're listening to the way you write your name, because even my short nickname I've seen in over 11 different ways. Giddy, G-I-D-I, G-I-D-Y, G-I-D-D-I-E, G-I-D-D-Y, et cetera, et cetera, et cetera. And yes, I'm Starbucks cups, and I have that collection. And the fact is, at the end of the day, we give the same code. So people say, wait a second, I've heard of this. Soundex. I've heard of Metaphone. I've heard of Double Metaphone. These are all really good phonetic solutions, phonetic algorithms, but they're not meant for this. Soundex was devised 125 years ago for the Library of Congress, for cataloging books, not for listening for international languages that are derived from various different cultures. My name is derived from Hebrew. Some other people have Latin-based names. They have multiple names. They switch them around. Soundex doesn't know how to handle that. Chinese, Japanese, Russian. Soundex is way off, doesn't even understand it. Metaphone tried to just make sound it's a little bit better, and even double Metaphone tried to do that, adding in the understanding of Germanic-based languages, which are not that hugely different. But at the end of the day, they're not built for this solution. And that's why you're seeing fuzzy logic solutions out there incorporating Metaphone or double Metaphone. We know who they are and don't want to start because of confidentiality. And look, and actually their clients turn off the phonetic engine in those solutions. We're looking at a deep tech technology that runs over 48 algorithms in an ontology tree, knows how to listen to 44 different languages. Why is this important even? Because in the US sanction system, as of 2 months ago, they just added Cyrillic, Russian. And actually, by law, you need to now be able to do multilingual screening. Yes, we do that, but other solutions don't. And the regulator is going to give the market some time to get there. To this, when we're leveling out the field, the issues of unstructured or variations of spelling dissipate. They're no longer a problem. That's it. We eliminate that issue. So we start off between 5 to 7%. That's our starting point. That's the level of alerts. But the other point is the amount of false positives. So I want to explain what's the difference between an alert and a false positive. An alert is a flag. You have something. A false positive is you have something in comparison to this entry in this sanction list. And maybe you'll have 5 or 6 or 10 or 11 false positives for every alert. And this is the problem. It takes 8 to 10 minutes to resolve a single alert. That we know across the market. We've spoken to so many banks already. That's the problem. It's a lot of 8 to 10 minutes. It's just a lot of them. When you're using our solution, we reduce the operational cost by 90%. I'm not joking. That's the number, Kristen. That's why we're saying best in practice. It's not in one bank, it's on 2 banks, it's way beyond that. We're not going to go into how many. We actually have, Josh, where we already have the recommendations, and banks giving us recommendations is really weird, that they're giving such compliments. But this is the difference. Working in an orchestrated way with the payment engine, coming in, resolving the implementation so fast, so it's process that we write 12 weeks, but we finish always under 9 because we work together is the way that we're seeing what is. So to your question, Josh, what is best practice? That is best practice.
Absolutely. And Kristen, I just want to come to you for a second. So Giddy speaks some fantastic numbers, and he's already alluded to the reasoning behind having a pre-integrated with Payments Hub. But in your customer base, do you already have some customers, without naming names, who have switched on Fincom, and are they seeing these sorts of results?
Yeah, we've had great customer adoption with the Fincom solution in that not only is Fincom very fast for adoption, but they're pre-integrated with both of our multi-rail payment hubs, as well as some of our legacy wire payment systems here in the US. So customers are getting very rapid adoption. But the other thing that we're seeing more and more of is that the inline payment screening, especially for immediate payments, wires, SWIFT, and others, is one piece. They're also leveraging Fincom as their enterprise sanction screening tool. So we have many clients who've started first with our products, and then they've layered in all NACHA payment screening requirements, all know your customer onboarding, and then the perpetual know your customer or ongoing screening. So they're designed, frankly, to have the same really tremendously innovative new approach to screening across the entire sanction screening needs of a financial institution. And it's all integrated in with this phenomenal case management tool. And this is one point that also kind of I had an aha moment that I'll also highlight, in that Whitelisting, as we talked about earlier, is a horrible practice, and the reasons as to why, because you've got to be continually screening that okay to pay or whitelist. What FinCom has done to avoid that is you no longer need a whitelist because their system is smart enough to remember that I reviewed and did my due diligence on Giddy. He's okay to pay today, and they know exactly what I viewed for a potential hit if it was to occur. And as long as all of the data for the lists that are loaded into FinCom remain the same, that persists. Meaning, the next time I pay Giddy, it flows straight through. Now, if any of the data I use to evaluate and make that decision changes from, in this case, the U.S. Department of Treasury, it gets raised back up as another potential hit, and I have to reevaluate. So it protects me from having to do a whitelist and to continually screen it, and that it's smart enough to know that. And it's a feature you could opt to turn on. And our customers have fully embraced that and are seeing over time even better straight through processing rates. So I'm going to pause there. Giddy, anything you wanted to add there? I just think it's been a tremendous partnership, and I have really thoroughly enjoyed working with you and your team.
Thank you so much, and likewise. I did want to add, and thank you so much for talking about persistence, which I think is great. And again, without naming names, we had a client, a mutual client, that has gone through a full OFAC audit, and the OFAC, they love the persistence because they like the fact that nothing is whitelisted. They like the fact that everything has gone through all the time. So that is even playing for the regulator that liked it. But I do want to add to the fact now of RTP, real-time payments. Our solution, and we have to realize wires, it's 56 fields, right? And when we're now looking at the new ISO, we're adding 7 more fields. So that's going to be 63 fields. The token-based solution, the fuzzy logic, screen all those fields in one manner, in their manner. They look at it, everything is the same. The free text is the same, and the address is the same, and the banking information, the beneficiary. The problem is, you cannot screen an address the way you screen a beneficiary. It's 2 different things, especially free text. So when we're doing a screening of a wire, we're using 6 different methodologies. And we can do this because we're normalizing, again, we're leveling out everything into mathematics. So we're faster. Remember, computers like numbers. They don't like letters. They really, really like numbers. So when we're doing a 56 field wire, we screen 6 different ways, but it takes us under 500 milliseconds. Real-time payments is only 9 fields. It has no free text. Essentially, the Fed and whoever put it up there, like FedNow and the clearinghouse, said, I want to help the industry. I'm going to reduce the number of fields, but you better look at these fields and you better do your job only on 9 fields. Again, when we do 9 fields, it only takes us 150 milliseconds. But when you're going to be using fuzzy logic, was that 200, 150 rules, there's no way to get to that level of speed. And for somebody to get to that speed, on what are they compromising? That's the question. And that is a compromise that you cannot have, because when it's only 9 fields, you better meet your demand. And the demand is not to play with. It's a regulatory demand. So I'm emphasizing this. And again, fuzzy logic is a legacy technology. And by the way, I want to say something on that. It was good when it came out. It was good when it came out. It's 20 years, 25 years old. And if we also look at the sanction regime, what happened in the last 25 years, and went from, from something very, very minor or small to something worldwide encompassing. People from China, Korea, a lot from Russia and from Eastern Europe, South America, Middle East. You have languages there that are not English. The least you have is English-based names there. You have now in the US OFAC list 2 languages, English and Cyrillic, which are mainly Russian, but you have some Bulgarian. But you have already, if you look at the UN list and the EU list, you have 6 languages there. In my opinion, it's not a far-fetched idea, but soon enough, Arabic and Spanish will be added to the OFAC list. These are the most common languages. How do you do this? How do you meet your regulations? So you have to find, in my opinion, the latest technologies. That's what you have to do. You have to implement the latest technologies. Not only the vendor, you have to start also with the essential platform, like the payment engine.
Yeah. Well, one thing I wanted to maybe see if you could add some comments on too, because I know
Please.
we've been hyper focused on sanctions, obviously, the OFAC list here in the US, but I've also had a lot of clients lean into the fact that you also solve for FinCEN's anti-discrimination rules. Can you tell us a little bit more about how you
Sure.
do that and what that means? Because I think that's also critically important for folks to be aware of.
Thank you for that question. So one of the points that we have to remember that when you're doing fuzzy logic, a very well-known algorithm is called an n-gram, which essentially says 6 letters in a row is a statistical match to something. So if I have 6 letters here and 6 letters here, it's a match. That whole entry is a match. Now let's look at the most common first name in the world, Muhammad. It is a fact. It's the most common. You could look it up. It's the most common first name in the world. That's 8 letters to sometimes 9. By the way, Josh, Royal from I think it's Oxford. They wrote how you know how many ways there's to write the name Muhammad?
I don't know. I don't want to hazard a guess.
56 ways to write write Muhammad. 56 ways, 8, 9 letters, sometimes 7, sometimes even 10. If you're using an n-gram, you're gonna hit every time the word Muhammad appears in the sanction list. Now, I'm sure that you realize that Muhammad appears not once or twice in the sanction list. It appears a few times. So you're going to get hits. Now, rightfully so, and problematically too, you had the regulator and the Congress come out and say, wait a second, hold it, guys. You can't stop a transaction. You cannot stop somebody from being your client just because his name is Muhammad. It's the most common first name in the world. Hell, I'll stop everybody with the name Steve eventually, or Stefan, or whatever. How do you do that? So that's the discrimination. By the way, the second most stopped name was Vladimir. And it doesn't work. We understand it doesn't work. And then they had that problem with an n-gram. By the way, just to point out, that's the problem also with AI. AI is inherently biased. I didn't say it. The regulators wrote it. Actually, that's what all regulators have wrote. And it's true. And if you ask people that write AI, they'll say it's inherently biased because somebody wrote it and he put those ideas in it. So if you look the way, and I'll give you how you know it's inherently biased. Ask any chatbot or, one of those, a person cleaning the house. Give me a picture of a person cleaning the house. What are you going to see, Kristen?
I'm not going to answer that question.
Okay, you got it.
But I can imagine what can be seen.
You're going to see a lovely woman in a dress cleaning the house. Now, can you explain to me why? I mean, I clean my house.
Stereotyping, and yes, this is where it's very flawed. Yeah.
It's inherently biased. That's the biggest problem here. So we have to do away with that. Yeah.
But I want to make sure it's important to note that not only is it recommended by FinCEN, but banks have had reputational harm and been fined for anti-discrimination practices where maybe loans haven't been approved based upon a first name and folks haven't been allowed to onboard to a bank. So it is a real issue, and the fact that you're leveraging the phonetic-based approach and looking at the whole name it solves for it. And I just want to drive that point home. So it's not just about sanctions, it's about other.
14 fines, fines, average $10 million fine. So it's not $100 million of OFAC. But who wants to be fined for being discriminatory? You get $10 million fined for being discriminatory. So it's terrible reputation. And it's known because we found it. It wasn't very difficult to find. It's out there. There's news. It's a problem. And there shouldn't. By the way, it shouldn't be a problem. There's no reason for it. as you pointed out, we just don't stop for a single name. Our system is designed that way. It doesn't stop for one name.
And the other piece, sorry, Josh, the other piece I get a lot of questions on is what you offer and can do around 314A. Do you want to just give like a minute or two as to what Fincom does in that area as well, and what 314A is for those who don't know?
I'll add to that, and I also have to point out that it's a question also to do with how Finastra and us also can help real-time payments in other ways. So when we're connected with Finastra's payment engine and the way it works, we get all the information. So the entire wire is sent, we screen it and we send it back. If everything's fine, 95% and better of the time it's fine. STP goes up to over 95%, straight through processing. And we have all this information. Now, we hold this information for the client, of course. 314A is a situation where FinCEN, the regulator, can send you a bunch of names and a certain address, a certain date period, let's say 1st of September to the 15th of September, 2023, were these names appearing in any of your transactions? That means, did you do any transaction, wire, ACH, whatever, was these people as a beneficiary or a recipient? Since we have the database, we built that capability to search it for certain dates with certain names. So that is taking away a lot of the tedious work that we're seeing in a lot of financial institutions that get that request. But here's the other point. Since we're getting all the information from a real-time payment, and you raised this, there's questions regarding fraud that you could actually put from the get-go, even within the screening solution. So we found ourselves working with anti-fraud providers, helping them with information on the back end, like geographical issues. I'm sorry, if you're seeing somebody coming in from somewhere that it's not supposed to come in and you have that on the transaction and you do, we know how to say, hold it, we see it, stop it.
Yep.
That's the first cue as it comes in. So we know, and all of this is a way that one can work with another. This is what Finastra is bringing to the table, how both vendors and the payment engine work together. And that's essentially how you get to faster, more accurate, and I got to say more accurate and more efficient and effective compliance in general, not only sanction screening, compliance. Yes, we're showing, great strides in the area of sanction screening and reducing the operational cost. And please.
Yeah, so both we're coming towards the end. We have to start wrapping up. But one thing that's super clear to me is that we really need to, everyone listening really needs to start looking into this phonetic-based screening. And as I said at the beginning, we have Finastra always seek out the best of breed solution providers, and Fincom have been a fantastic partner we've been working with. But maybe to wrap up, Kristen, could you just kind of give us a minute on what customers can expect from engaging with you and Fincom to help start defining their sanction screening strategy?
Yeah, definitely. I think that between the joint partnership, really understanding where to start and how to deploy a phonetic-based screening throughout the institution, it can be achieved through the joint partnership between Finastra and Fincom. A lot of folks are also, raising the question, what is best practice? What is required for domestic-only methods of payment? And certainly, Fincom is very clear and recommends, as a best practice to err on the side of always screening. And we certainly concur, but ultimately it's the bank's own compliance officers and legal teams guidance, because We've seen some institutions, for example, in the world of Nacha payments that are only screening IAT. Others are saying, FedNows and, US domestic only. Are we going to screen or not? So there's that debate. And I think it's really important not only to check with your own teams, but to talk to subject matter experts like Finastra and Fincom to get a sense for what other institutions are doing and what we're seeing as best practices before you make a final policy or go forward decision. So that's really where you get is essentially the consulting, the guidance, the advice, and the best of breed recommendations for fintechs that we see in the marketplace like Fincom.
Fantastic, thank you. And Giddy, any closing thoughts from you?
Yeah, I want to what Kristen was talking about exactly. There needs to be a realization that coming out with a new technology, you're not going to have the same tedious overwork that you're seeing today with legacy technology. So doing all the screening and being kind of dorkish but keeping within the exact rules, because if you look at the first rule of OFAC, it writes there, screen everything. Don't even ask. Screen everything. If you ask me what to screen, I'll tell you to screen everything. So that's pretty much what the regulator says. That's what the law says. When you screen everything and you have a 30 upwards alert rate, you're going to it hurts. It's bleeding. When you have, so just to give you an example, in ACH, we have less than 1%, much less than 1%. It doesn't hurt anymore. You can do it. So that's one thing, to come to your experts like Kristen and say, I want to do this, but it's a risk approach, and to be open-minded that things change. Secondly, and this is very important, is to understand that today there's a big difference in implementation. A lot of banks rightfully are afraid of implementations, especially like sanction solutions that are so core. They are really core. Because we've seen legacy solutions take 12 to 18 months. There's no reason, and costing just stupid cost. There's no reason. There's no reason for that to happen. I'm not going to go into our silly cost for implementation. In comparison, it's ridiculous. But the important thing is, put aside the cost, it's the time. We know how to sign under 12 weeks. That's the common practice. But our actual implementation is on average 9 weeks, and we've done also in 3 weeks. It's a lot of the UAT is up to the bank. My point is that things have changed. There is a lot of new technology coming out there. You have a business partner by the name of Finastra. Finastra is also looking at innovation. Sometimes you see things you don't know that are out there that Finastra sees, like Fincom, because we don't go to the banks. We're working with Finastra. Talk to them, and you'll get the better result. I got to say again, I know you guys, I don't want to sound over being too nice and everything, but it is a great partnership. We have from federal banks already, tier 1 banks, regional is the biggest regional bank, and everybody is getting consistent. It's consistent across the board, over 90% reduction in their operational cost. That's what we could say. I mean, without giving anything away under confidentiality. And it's a great partnership, and we're looking forward for the next year to come. Your fiscal year very soon starts, and we're looking forward to having an even better year. So that's my 2 cents.
Fantastic. Well, both, thank you very much for coming on and sharing your expertise today. It sounds like the partnership is just going from strength to strength. Best practice solution to very well-known partners, low risk implementation, and a lot of value to be achieved by our customers. So again, thank you very much. I hope people who've joined in enjoyed the conversation and that they reach out to you to really take advantage of your expertise.
Thank you. Thank you, Giddy. Thank you, Josh.